How to get out of a merchant cash advance quicker and effectively without getting bombarded by many others and getting mixed up in the process. Hi, welcome in. My name is Michael with Viral Funding Solutions, and I've been helping out a lot of people with MCA debt relief, getting credit, cash flow, revenue-backed financing, collateral-based, equity, real estate funding, and so much more. I've been doing this for many years. I am people over profits. Characteristic traits matter to me a lot. I have your best interest at heart. It's people first, business second. And what you should know before I go any further in this, aside from all of the business experience that I have and multiple businesses that I have put myself together as a person, personal growth and development, adapting, having more of that mental toughness, that thick skin. I'm not a salesperson at all. I have an academic background. I studied sociology for a little, played Division One soccer, and then I got into chemical engineering. Did that for some time. Very math and system brain. Not much of a talker, introverted, much more cerebral, analytical. My actions show more than my words. And I did that for some time, and then I made a big decision. I wanted to start a business, so I went through business, got my degree there. I've worked in construction, manufacturing, warehousing, was once a ramp agent, yes, believe it or not. In a courier role, administrative dispatch, the marketing, financial side to financial logistics for a huge contracting company servicing HP and Peace Health. So I've done quite a bit, and I'll try to share more of my story as we go through this video and to the end of it. So let me get back onto things here. I understand how hard it is once you're in hardship with emergent cash advance. You're on the verge of missing a payment, you're already missing payments, or it's just one. It's about to bring an avalanche of more payments, or the same lender you're making more missed payments on. And then you have another lender. It's like you can't continue. And then cash flow is depleting if it isn't already. There's not enough available cash flow. You're restricted. You're likely in default. And if you're not, you're about to be. You're thinking, should I file for a bankruptcy? How about Chapter 5s? I've heard of those in Article 9, organization. There's just so much more here that I can get into. We only have enough time in this video. So what I'll do is I'll leave you more information down below in the description where I'll have this form that looks similar to this. It'll be updated for the year. There will be a form on the right, or you could come to a page where it's the full video, and then underneath it, you can click a button to go over to that form. So you'll see this right here. Please go through this video, watch it. No minimum FICO score is needed, excuse me. No collateral is needed. No upfront out-of-pocket fees. No negative impact to your personal business credit in many scenarios. So here's the form, and what I would be asking for is your name, your best email, your phone number, mobile preferred, time in business, is it years or months? Please specify. I have people who just put a number on there. How much MCA debt or MCA-like debt do you have? How much other business debt do you have? Total business debt restructuring desired amount. Are you current on your MCA payments or payments? Yes or no? How fast do you need to get started? Honestly, that's like right away. It's in much more pain than when you needed funding in the beginning for whatever problems, obstacles you were trying to overcome. You have a contract. Now you can't fulfill on that contract. You can't purchase equipment. You have too much equipment. You have to downsize. You let go of employees. You're not getting enough inventory. Inventory count is low. You need new and you need to modify existing payments. There's just so much you're looking to do. Here you have your business industry, business name. Please describe in detail your hardship and hardships you and your business is dealing with, how bad is cash flow plans, etc. So this can help you here with MCA debt relief. And primarily, we can look at something like debt restructuring, and I'll get into that in a moment. And as I go through here, you'll learn more about what debt restructuring is. And this is one of the options that I mostly recommend. And if you're not in the best position to refinance and put this underneath like a bank term loan, an SBA loan, try to get a bank loan with the line of credit in the meantime to help bridge cash flow gaps, receivables, unpaid invoices, however many days those are out and set to be out until you expect to receive your payment from your customers. There's so much more to look at. So, what is debt restructuring? Are you drowning in MCA or MCA like debt or any other forms of business debt and can't free enough cash flow and continue your ongoing project and projects without worrying and are ready for a team of experts who can help you restructure or settle I'll get into that a little bit later. So you can take back control of your business and also be able to pay yourself a salary, enough of a salary. If bills are mounting up and you can no longer take that, and then you have to worry about other parts of your business. You don't have enough employees, you have to cover certain roles, you don't get enough material, supplies, your cost of goods sold are going up, cost of sales, you're not liquidating enough, having enough cash on hand and in the banks, and then for other projects, enough cash flow day to day, your average daily deposits, your average daily bank balance, and starting, ending, the types of transactions, how you're receiving payments, invoices, you have suppliers, vendors. There's just so many payments going in and out, not keeping enough every day. And because of these MCAs, you're losing a lot of your profit. Of course, you're already not keeping a lot of 100% of your sales revenue. And if you are, that's one thing, depending on the transactions. What are those transactions? What margins are you operating on now? So it's very important that when you don't have enough available cash flow to get immediate relief and reducing the payments, a modification, modifying these and getting a restructured term is what you're doing with restructuring. So eventually the lender can get paid usually 100% instead of settling you settle for less than what you owe, funds are then going into an escrow account where they are accruing, and you have enough accrued over time. Generally, it's a couple of months, and then you have what you can to pay the lender. So that's not always the right way to do things because you might already be having a hard time paying the lender and other lenders. And if you're already facing delinquency or are about to, and these other problems accrue and occur, then there could be some kind of aggressive action from the lender on you. Could be legal action, and just so much more develops in collection and defaults and all that. So you have to be careful of. So debt restructuring right here is great when you can't consolidate existing debt with a new loan. Like I said earlier, a bank term loan, an SBA loan, those would be ideal. And I do help people with those in case you were in question. I've done them all. And again, I'm an expert at what I do. And if you were wondering why do people come to me as opposed to everybody else, it's because of who I am and why I am the way I am. Yes, I'm introverted, and you're competitive, and your best advantage is to work with somebody like that who won't talk your ears out, who has his processes, his systems, the right amount of automation in place. In fact, a lot of this we can do it over email. Very congruent between you and I, send you information on the process, how this would flow, and it helps you keep more energy and your time in place, especially when you have all these things going on in business and in your own life you have to transition from. So I make it very easy for you. I have a lot of integrity. I'm extremely loyal. I'm a Libra, if that says anything. One of my weaknesses is that I just care too much and I can kind of go over that. But in many cases, I'm calculated and I know when to give enough of it. And so that's also another advantage that I have. And I'm very nice. That's what people will tell you. And I really do have your best interest at heart. Trustworthiness, you don't have to worry about that with me. I'm the one usually having to be careful of those who come across me and the kind of energy and time that would be sucked into this, the friction, the resistance that didn't need to be there, but it was added, self-sabotaging, self-defeat, manipulation. I'm not for that, so please don't bring that my way. We don't have enough energy in the time in the day to be thinking, one, thinking, and then two, expressing that, do we? So right here, consolidating existing debt with a new loan. If you can't do that or can, but it's not enough or strong, you don't want a new loan from a reverse debt consolidation. Way too expensive. I'll get into that a little bit later. And are having trouble refinancing debt. Keyword being refinancing or refinance, you can say. If you've done a reconciliation, you've done a modification already with your current lenders, funders, that's one thing. And that's not a true restructuring. If you didn't know that, you're wondering, how can I reduce payments so I can get enough available cash flow into my business and keep more of my cash flow? That's the most important part. You have an increase of about 20, 25%, or whatever that increase in cash flow will be every single month, every single day and week. That's very important. I know well running multiple businesses what cash flow does, what gross profit margins, net profit margins, new customer acquisition costs, strategy, current customer acquisition costs, marketing efficiency ratio, media efficiency ratio, lifetime value, lifetime gross profit value. What's your average order value? What's your average cart size value? There's just plenty more that I can get into with how many visitors you get, how many of those visitors convert, what's your conversion rate optimization. There's just so much more that I am and who I am, not just somebody who helps people with funding. So I've done a lot helping people with their cash flow, profitability. I read financials. That's my bread and butter, a lot of it. And I help a lot of people out, read financials, bank statements, credit reports, P&Ls. I know exactly the flow. So there's a methodology behind this. So if you're getting impatient, you're like, why don't I just jump to this next thing? And I tell you that, look, based upon these details, it's more important that you start here. If this is going to produce a lien, if there's already enough lien, but you don't have enough left over and you won't get enough, you're going to waste on those unpaid invoices. You would have rather kept them for other reasons, for other plans and projects. There's just so much more you have to account for. That's why I'm here to help you, and I'm not here to steer you in the wrong direction. So right here on our having trouble refinancing debt under other services, so you need existing debt lowered by an average of 40 to 75% plus by an attorney-led debt restructuring team, attorney-led industry experts, and a specialty law firm that will help restructure your existing debt into more affordable ones. So what I don't do is just shove a contract and put it in front of you. Here's an email. So here's what we can do. And it's like a pre-approval for most cases, especially if you didn't submit any documents. And even after you submitted documents, is that the way they should be showing it to you? It could be, but other times you have to be careful. Sometimes a restructuring may be disguised as a settlement, or a settlement is the opposite, or you don't know what you're exactly getting involved with. Was it an actual settlement? Who's settling this in these accounts? You have to be very cautious of who you turn to. So not everything is how it appears. And what I value most are people. And so for me, it is values, vision, mission, morals, ethics. Again, I have myself as a person and in business together. I'm not perfect by any means, but I'm very nice. And again, I'm much more thoughtful, cerebral. And so the words don't always come out the way with me. I'm not a wordsmith. I've just learned the unlimited for life income skills, the high income skills. And that's what separated me apart from many people. And so when you hear from me, just listen carefully. And I like to infer more than be direct. I can be direct when I have to, just so you know that. So it's not like I'm not. I know when to step in and when not to. Unlike most people, like I don't overtalk you or I don't talk over you at all. That's not who I am. And I listen. So a lot of this, again, we can do it via email. If you submit the form here, I'll send you an email with all the details. And if this is the option for you, you can respond back to that email. And then I can send you over documents to fill out, unless I sent them already before. And right here, I have a free document you can pick up. I'll show you what that looks like in a moment. So over here, what you're eligible for, I'll get into the eligibilities a little bit later. But what you should know when it comes to the process, it's entering information, reviewing with the team that I go back and forth with. And if everything is in good order for a restructuring or a settlement, usually I want a restructuring to start with, and that's normally the direction that it goes, starts, and ends up with. That's what I would recommend instead of the settlement because of how much time that can take, food funds, and if you need immediate relief now, it's like the reduction will really help amplify. And then once you graduate from that, then you can go and look for more affordable funding options. A lot of the times right now you're not ready, and I'll go into what some of the other qualifications for the other fundings and the other types of services require. So reviewing the submission, then moving forward, I'll reach out to you. You can get in contact with a payment analyst, which I will set up a Calendly appointment for you. I'll let you know like what times are you available for this. Okay, looks good. And then you have a call with one of the principals and a principal, and then from there everything looks good. Then it can develop there into the whole payment analyst part. And then you're going to have a better understanding of what you can and can't do. And I'm on the back end, just so you know, with a lot of this. So I understand what's going on and I review a lot. So when I'm asking for documents, like what kind of debt do you have and how much debt do you have, original payments, ongoing payments, current balance, all this stuff, I look at it and I account for. And what we're looking at is how much cash flow do you currently have, how much cash flow can you project with more future receivables, invoices, unpaid invoices, and more. And what is your current average daily deposits, average daily bank balance, number of deposits, starting and ending balances, ties to transactions is actually the most important one. Well, I'll say some of the other ones too, but wanting to know what kind of transactions, what's leading up into everything, and why is more going out than what is coming in. And so there's a lot that's based and predicated about on your cash flow, but you should know that this is the steps. And then once everything looks good, yeah, that was communicated with the payment analyst, they feel like it's a green light for both, then a contract normally gets sent out and then done. You're ready to go. You're into the program and from there. And if you're asking what fees there are for this, for when it comes to restructuring and modifying, it's what's happening is modifying, restructuring the terms with your current lenders, going and doing that on your behalf. The team does that and helps you with a lot of this. Is it depends. It depends on the type, the amounts, but it can be a little bit higher up there. Maybe you see somewhere between 5 and 15% more or less, 3 to 5, 5 to 15, more or less plus. And that's after. There are no upfront fees in any of this. So you have to look at what the costs are, yes, but you have to look at what kind of pain you're in right now. And it has nothing to do with the fees when it comes to a lot of this. It's usually another reason for most people, and they don't like to share it, or they do share it. And if I asked you, what's your plan B? You're in this much pain, and I know the kind of pain you're in, and there's no other way, or this is the best way to do it for you right now at this time, and it should have nothing to do with origination fees. At the end of the day, sometimes you're trying to bite it for every single piece of cash you can have on hand, how much you're accepting from credit card statements from clients. There's just quite a bit. And that's another direction you got to look into too. If you're doing payment processing, like what should we do? Is there cash discounting, dual pricing, standardized processing? Are you doing surcharging? Are you doing any of it? Are you a cash only business? So you have to understand that those are other ways we can go and to save 2 to 4% plus on average, getting an additional 2,500, 3,000 plus a month, depending on how much revenue comes in, keeping 100% sales revenue in the business. So aside from that, this is what you need to know is there's a process, and I'm not going to just steer you in the wrong direction. That's not what I do. I don't steer anybody in the wrong direction. Here are some of my funding clients' results, and I just put a handful of them there. I can put more, but I just put a handful of them there about us. Then right here, clear your debt before it's too late. And then about myself, you can learn a little bit more about myself there. And there's a number up there, yes, but fill out this form, please go through that. And if it doesn't submit, here's another thing. If it doesn't submit, it could be because there's so here's what happens. It could be a clear to cache thing, cookies, it could be a web browser, IP, something like that. What I have is very safe and secure. Shouldn't worry about what I'm doing. I have what I have here, and it's in your best interest to do it this way because there's a process. And other times it doesn't work because you've probably been subscribed to many people's lists and you just didn't know what you were subscribing to, or you did, but you just haven't been opening up email. So your open rate, the open rate for the servers, like I have Aweber, is an email marketing tool that I use for automation. I can put sequences, I can send out broadcasts. So if you don't open up with those enough of those emails, you're not looking at it, you're not receiving them, going to the spam folder a lot of the times, a lot of this stuff you're not being responsive. A lot of the times the servers don't like that and will kind of like kick you out even without you knowing a lot of times, or it just puts you on the side. And so when you try to submit a form like this, a lot of the times it's because you haven't been opening up emails or you haven't been doing enough responsively with being subscribed to other people's lists, viewing, clicking through once you open up the emails and all that stuff. So it can happen, third party stuff. So that's just what happens a lot of the time. Maybe it's something that I might have on my end from time to time, but normally it's those other two. So now let me go back over here, how to get out of a merchant cash advance quicker. Here's overall what we can do. There are different scenarios. Two of those I shared with already that are debt restructuring and settlement. Usually the debt restructuring is what I'd like to lead in with. If you already have a couple of settlements going on, maybe the settlement is the right way to go because you already have a couple and it could be the only way to go. In other instances, it could be starting off at a debt restructuring, even at that level, and then seeing what develops into that and what's best suited for you and your needs. So you have to also understand if you've already settled things, how it can look like. It can look a little bit different, varying. Can we include the other lenders that have settled into the restructuring slash settlement program? And in most cases, usually that's a no because you're already settling. If you're settling with somebody else, you already have had the contract. Usually you have your side only that only has a signature a lot of the times and what you have, and then you don't have a copy a lot of the times. So it's common to see that. And so restructuring, settling, restructuring is the way to go to dropping 40 to 50, 40 to 75%, 50 to 75% plus on average. And this will likely be your best option to modify existing MCA contracts to dramatically reduce and the pay plan with extended terms. It's a great alternative to a bankruptcy. Payment reductions can be like 50 to 75, 40 to 75% plus and more. It just depends on your situation. I've seen other times being lesser. And because your revenue is tied up to merchant processor, a platform, like e-commerce businesses, Shopify, it's very common that you're stuck on one platform and where you're receiving 100% of your sales revenue and you're doing a lot of your business through, and then you have a processor, and then it's not going to help you because everything is tied up to one. All your revenue can't be protected. That's why a lot of e-commerce Amazon businesses have a hard time with restructuring, and they're not the best to help through the restructuring program. And then you have to change your credit card processor a lot of the times, whichever credit card processor you choose, but it's to help you get away from what you're processing already and what you're having to pay back in MCA payments to protect you and to go away and say, hey, you're not making it through this processor, you have a whole different one. So that's another tip right there that'll be very helpful to go through. And again, at the end of the day, is how much pain are you in? It's not the fees, it's not that. One, being in the right program, knowing the right steps, the process, not being shoved the contract just down your throat or down your way and just like, oh, well, that's the only way they're presenting it to me. Have better processes. I actually have your best interest at heart and how to do this the best way possible. And looking at how much pain do I have? I can't continue to make these payments. I need to get out of these. And the whole point of it is to eventually get out of these and never have to take another MCA payment again. That's the whole premise of this. If you did, that's one thing, but it's really to get out of these and learn that you need to get out of this MCA hamster wheel. And a lot of the problems they start with the foundation of the business and the foundation of the finances of the business. And then that seeps through much more. So there's a much more bigger issue a lot of the times, and it's accounting and bookkeeping, which if you need help with that, I have a team to that as well. And I can help you along the way, get your business in better foundation and then the infrastructure built correctly. I look at a lot of businesses, just so you know this. And I understand different opportunities when you should grow, when you shouldn't, EBITDA, how much cash flow do you have over the year, how does that break down monthly? Why does it break down like this gross profit, net profit, return on your investment? And so, yeah, there are a lot of issues with MCAs too. When you take it, you have a good use for it, and then it just kind of expires, but you still have these payments and you expected more to receive in revenue, or you had a slump and then the season changed and something else happened. You lost a contract, some negotiated terms didn't go the way you wanted it to, licensing deals, patent that you're waiting on. You're trying to get a new building, but you couldn't move fast enough. You didn't have enough permits for what you needed for zone property, land. I've seen it all, heard it all, literally. And just so you know, I'm doing quite a bit of stuff even on the equity side. So you can only imagine how much I've seen. I've built up market analysis for people, looked at their pitch deck, their business plan summary, looked at everything to make sure it's correct on my own assessments and my own numbers. So again, I know what I'm doing when it comes to this. And so a great alternative to bankruptcy. And if you had to file bankruptcy and that's the only way out, and it is, you have assets. Another thing you can do is look at assets. And if you want to get out of these MCAs, which I don't have listed right now, but you can use like account receivables. How much in account receivables, unpaid invoices? Can we do invoice factoring, account receivable financing, factoring with these receivables that are outstanding? Are they aged? How much of them are aged? Over how much time? When do you get paid? How are you getting paid? That all is very important. How the customer pays you, when they pay you, how much are they paying you? And so you can get account receivables to knock off a couple, if not all of the MCAs. So that's another option, unless you don't want to, because of liquidity, you're trying to have reserves. Maybe you're getting into a drier season or your type of unpaid invoices are not growing in one area as opposed to the other, or you're just getting so much at once that you want to hold on to them for now until you have a much more bigger project. And then now you need to look for more ways of funding that project and to bridge those cash flow gaps when that construction project or whatever it is getting built and you won't get an immediate ROI. It's over a year worth and more. So you won't get your return on investment as quickly. Your margins maybe they go up a little, but at the same time, you're not growing at the rate you wanted to grow. Your rate of returns, your cash on cash returns, cash to cash returns, and plenty more. So there's that. You can do equipment financing, or excuse me, do a cash out refinance on equipment. There's that. There's real estate property, commercial property, investment property that you own free and clear is usually it. That we can look to see if you have enough equity to knock these off. Can we do a 1% month over month, only interest, hard money real estate loan scenario? Could that be possible? Are there other ways of doing it? So you have to look at that 401k IRA. Now you're starting to go through deeper a HELOC, home equity line of credit, home equity loan, marginal accounts. I can go so much more now what your accounts are yielding, savings account, bonds, convertible currencies. there's just a lot more. So I don't want to get too much. I'm getting away from it. There's 0% interest financing too, personal loan. There's just so much more. But here, debt restructuring, a settlement is not the primary recommendation to put money in an escrow account, usually over time, and keep putting funds into that account and it pay for less than what you owe and things like that. So the restructuring is what I would focus on first. And it just depends on your scenario, what you already have going on. And if you're asking about like the titles or a title, usually you won't see that, but if it had to be put in for some reason, for what you already have outstanding to help your case to make it more attractive, then there's that. A lot of the times it doesn't happen that way, so you're asking that. But other times you never know, and it just depends on your situation, on what you have going on as well, and the deeper the file to look at. But escrow account is usually how it goes with the settlement, the restructuring, opposed to different. In differences, you see similarities. But yeah, so there's that. And so if your available cash flow is low and because of these payments, and then also if you're having just hardship making these payments, but the other thing is if you have revenue, but a lot of it is due to just your revenue and your sales, that's not saying you have it's just a revenue sales problem. It's not an actual payment. That makes sense. So this is a lack of revenue and a lack of sales that can be leading into payment issues. But a lot of the reasons you're not being able to make the payments, it's due to other reasons, not just revenue and sales that you are lacking. So it's usually when you have cash flow issues, you can't make the payments, you're facing hardship, you missed a couple of payments or one. That's when it's most appropriate to do these. Getting a bank term loan to consolidate, debt refinance, the MCA funding. Usually it's refinance, consolidation. It can mean two separate things. Most people, when they think consolidation, you mean on the personal side. No, we mean on the refinance side, on the consolidation of everything you already have and getting a new loan. Usually it's refinance of that. How much are we refinancing? What are we refinancing under the new term agreements for a different type, not just an MCA anymore. So if you're thinking of restructuring and you think that's MCA, that's a whole different thing. You're modifying your reconciliation, trying to help you reduce payments so you can afford to make the payments for some time until you can get back up. And every lender is different when it comes to that and helping you relationships and more. So this is different. So consolidation, debt refinance, the MCA funding. To get this, you must be current on your existing debt payments. You can't have missed or self-negotiated reduced payments already. So most people, they already do that. And I don't mind if you come to me. That's actually something that's even likable and a lot of the times preferred when you have self-negotiated reduced payments already with your funders or lenders or one or however many you have, and you've done that with, that's fine to come to me and help you with the restructuring. And then I would ask you for things to put on the debt schedule that how they would need to be put. I can communicate that with you in time. Email wise, I got all the information I can share with you there. So to get you this, you must be current on your existing debt payments for the majority of the time. That's it. And if you're already facing a default, faced in one, you're in collections, past default with the judgment in place, things weren't corrected, still in collections, coming after your accounts, shut down accounts, you shut down your own accounts. Oh man, there's just so much. It's like, how can we get you a bank? Like you're already showing default. And another thing too, I ask people majority of the times, and other times it's asked later, is if you have account receivables, are there liens on those receivables? Do you? It's already going to make it hard. And if you're looking to get AR financing, but you already have a lien on those, like how much do you have that doesn't have lien, expected not to? And so you have to a lot of the time go through a restructuring or a settlement that will be much more helpful to you. And you have to look at the long-term picture of where you can then restart and then having something much more solid. So you don't have to get into these MCAs any longer, no matter the amount. They're still expensive. No matter what you needed to use them for, they're very expensive. Even if your ROI was better and it was benefiting it, yeah, you can use it for that. That's what's most recommended. To use these for their ROI being greater. Now hitting equilibrium on the cost of funds and all this and having more funds available over time. And so no self-negotiated reduced payments, and you can demonstrate the ability to carry the obligated debt, cash flow analysis, global, personal business. There's things that I do as well. Along with that, you need a 680 plus credit score on all three consumer credit bureaus. FICO 2, you'll see FICO 8s, FICO 9s, 10s, et cetera at times, but FICO 2 a lot of the times you'll see here. Sometimes at a 620 level is okay, but that's with compensating factors like better cash flow, profitability, not missed payments, little to no non-sufficient funds, negative days, delinquencies, and all of that. So the file has to make sense for that credit score to make sense. And so you'd also have to be generating 250K in annual gross revenue a lot of the times. It's That's kind of like the starting point. Sometimes it could be less, but normally it's 250K and above for the last 2 years. Other times it's just 1 year. It should be the current year, the most current year before it when you filed tax returns. Uh, Other times it could be before that, but current increase in revenue trends. Why is it dipping? There's a lot of things, and I can look at that even deeper to see if this is a right solution. If cash flow, so right here for the last 2 years is best, 250K and above. If cash flow isn't looking good and in other areas, it's best to restructure, settle. You must be current on existing debt repayments for this to work. No missed or self-negotiated reduced payments demonstrate the ability to carry the obligated debt. Again, that's for like the bank term loan, FDIC bank, the SBA loan related to, and that'll make it harder than certain credit requirements. And then business liquid credit and then the E-Trans score, the model that they need. If you don't have the business liquid credit, you're not building business credit enough of it. That's something else. Projection of cash flow and profitability on SBA loans have become more important, and even currently in historical returns, but I still look at a combination of them. And if what you have in the past is negative profit or it's not enough profit, you drop in margins and then you reduce 30,000 in profit. Now you only have 2,000 every month or for the last 3 months. It's like that's hard to do. And bank loans, we can do like a blanket lien, a UCC lien, not taking the collateral. SBA loans, you can do similar up to 350, up to 500K more or less, up to 350 and 50K, 500K, usually up to 350K a lot of the time. And other times when you go beyond, you're getting higher SBA 7A loan amounts, collateral be into effect. And so how much collateral coverage you have, you want to give up that collateral. So there's a lot. There's a reverse debt consolidation, the least favorite option that I have. I would recommend this if you had no other option. And sometimes you cancel yourself out of a reverse debt consolidation. And this is where usually you have to give or you're going to be given another funder, another lender, it could be MCA or it could be another, on top of what you're already paying to help you pay off, to help you pay things off weekly, however that best works, however you're already paying. They'll see that and how much they can afford to give you, how much cash flow you have, how much will you have at the time of them dispersing the amount. And so they're going to give you more to help you pay things off. And so at the end, it's like you still have this other payment now that they gave you. You can have a lot outstanding, especially if you have much more debt, like you have over 100,000. Somewhere between the 10 to about 30 to 50K is much more manageable, but it's still you're given another amount, and now you have to pay that off. And if you don't pay that off, now you have this MCA debt again, if that's the case, usually it, and now you have to make the payments on that. And the whole point of this is to get out of it and not to continue to make payments. Yes, it's an option there. If all other ones don't work, or if that one didn't work, we had to look into another one. But a reverse end consolidation is what I would not recommend. And if you had to, you just had to. And there are places for it. There's a time and a place like anything, but those are my least recommended one. For the MCA restructuring, it's great when the current issues are due to cash flow, like I said, being restricted, not only usually due to a lack of sales revenue, as I said before. For taking more MCA debt to pay off or down on the other advances, along with for getting into a default, behind with payments, or about to default, considering filing for bankruptcy due to the financial struggles you're going through. Personal bills are mounting, you can't pay yourself a salary, and more. For secured debt, anything outside of the MCA and MCA like debt, that can be covered, but it has to be a total of a million plus. That's the standard, and it's normal to see. And at this point, clients are usually in a whole world of hurt at this stage when everything or the majority is due to lack of sales problem and not really a debt problem. We have to also account for that. But for the MCA type of debt, it has to be a minimum of 30K plus, and that can be given a look. So I'll have more details to that. And again, this is the document that you'll be getting access to, more or less. It looks something like that. So this can be found right here, unless I move things. You can click right here, check that out, and fill this out first. I would do that, pick this up. And if I have a place here where you can go through the form and fill it out there, then maybe I'll have it or directs you back to the questionnaire form. So here's that. I have more details here, but reducing 40, 75% plus, over 90% approval rate. That can be very helpful. Dropping an average of 40 to 75% plus, and just a little bit more details and use for reducing the interest rate you already have. And it depends on that, but don't always expect that to happen. That would always be the case. You're reducing, having a reduction of your balance, extending and bettering your repayment period, changing what is considered a past due status to a current one by combining the balances. No minimum FICO score is needed for that. And this will also go over like why you wouldn't be able to qualify. But there's some of the payments terms, just some examples giving you that's all. And no negative impact to your personal business credit in many scenarios, and no upfront out of pocket fees, like I said, other debt to restructure and the amounts that it would require on top of the MCA, like I said, a million plus. Example, like in debt enrolled, how many weekly payments you'll have, payment amounts, and debt balance savings, and just a little bit more there. Just giving you some examples on what to look at. Look at. And the plans are customized depending on your scenario, how far they can go out, 6 months, 8 months, 7 months. They can go farther, 1.5, so or 3 or 4 years, but it just depends on the client, and some things can be more rare than others. So you can graduate these things rather quickly. And here's what can cause you a decline: account receivables. So when we're doing a debt restructuring, true debt restructuring, where you have large companies, you're getting paid from like an Amazon, eBay, Airbnb, and like I said earlier, Shopify, Amazon businesses, they have this. And your revenue, a majority, if not all of it, is tied there. If 80% of your revenue is coming in from like a Best Buy, they're coming in from an Amazon, you know where I'm going with this. Why is 15% going here and then another percentage of it going here? Okay, that's one thing. And when I look at it as I put my business brain on and I look at it and I question, why is 80% of your revenue only coming through here when you can have here and evolve more here? I'd like to know more deeper into that, what kind of cash flow you generated from that, and then the other variances and the other revenue sources, why there's only so much coming from here. Is it more commoditized of a service? Are you bundling units? Uh, do you have a back end system where you're following up with your purchase buyers and you're bringing them more into your ecosystem? Are you introducing to them more products? Will something dry out? So you're just jumping from one thing to the next. There's a lot in business you have to understand and develop correctly the whole infrastructure. So I won't read through all of this, but you see right here, these bigger companies will honor your lien letters from the MCA companies. Small mom and pop shops usually don't have that and don't have to worry about that for the majority. The bigger companies don't want to be bothered, so they usually honor the lien letters. So when a bigger company honors these, excuse me, it can stop paying you and the business owner, yourself, your business, which means you'll lose a lot, if not all of your revenue. That's not good. It can't be protected. Some of it may be from other sources, but it's like a huge majority of your revenue comes from here. So how are we going to be able to restructure that? It's just not going to work when they're going to honor it. They don't want to be bothered. So the funder in this case has legal right to send out lien letters to the customers, but the customers have no legal obligation. Credit card processor to point sales ordering system to not change credit card processors is another red flag. You can't help franchises mostly a lot of the times with these into a new credit card system. It just won't work. They're just not built that way to do it. They're set on what they already have. And so a lot of the times you'll want to change away from your current credit card processor. That's usually how it'll work. Just choose one that's best for you. I don't have to give you a name, but if you needed my help, I can help you. And then with payment processing, I can develop that. So if you needed payment processing, I do that as well. And I help out with dual pricing, which is huge right now. It's one of the 4+ ways of doing it, and that's the one that I recommend right now because your customer can see two different prices on for credit, a little bit higher because of the fee, and then you have the cash price. And so I can go into that a little bit later if you needed help and getting a credit card processor and seeing what's best, different machines, different ways of operating business and saving more, having more profits, increased profits. So here's a little bit more. I don't want to go through it all right now, but you see it right there. There's just more details. And this is the one that you'll get if you don't have it now. I'll send it to you in time as well. I can put it in the email for you. Usually I do help you with more. Avoiding other scenarios. You have to be careful of what happens out there. So there's just some things that I'm sharing right now that are there. I won't go too much into that detail. Let me end it on this though. You have to be careful on what appears and is it right? Other ways are not right. Sometimes people will ask you for like a settlement to put money in an account, but they're paying themselves. It could be that. It could be that, the behavior of it, I'm saying. And so there's a lot of stuff out there and it's wild. And then the funders aren't getting paid. And it's like now you're the hugest liability. You are already a liability. Now that the people that mismanaged and they took the funding for themselves out of that escrow account and now it's not accruing appropriately or they left just a little bit or something else happened. They didn't restructure it correctly. You didn't get the best attorney-led team. You're going on your own. You're paying an exorbitant amount, additional fees. You don't have the right specialty law firm who has decades of experience, attorney-led team with decades of experience. It's like, why would I go to somebody to take care of my payroll who has no licensing experience or no experience at all and they don't have proof to show that they've done this and they've demonstrated this, they can do it effectively. They can do it quicker. They can resolve the issues, reduce friction and resistance. And there's just so much more. You wouldn't go to if the well-known food cart, you're trying to get a shawarma, and you know that's the well-known food cart. And there are three more food carts that are competing and they have shawarma on their menu, but shawarma is not like the main item that they sell the most of, or it's the one that they are the most productive in and have the most material for and set up for, and average pricing, prices are high, low, are they just trying to give me an experience with higher pricing? There's just so much. So you go where you want to have something at the time, and it just depends on each person. You might go to the best, you might go to a lower one, but it's what you're feeling that, or you wanted to spend less. But what I would do is focus on the best that do the best at what they do, and this is the direction to do it without being bombarding, without pressuring you. I don't do that. And I have communication with most people via my phone. I have my phone over here, but I have my phone device, text, simple email. Let me know when your availability is for a scheduled appointment, for when we're in the processes later to have a principal communicate with you. Fill out this form again. A lot of the communication I can send you via email. Based upon what you've entered here, I'll understand better what you're trying to do, kind of relief. And then I'll have like the document and more I can share with you on like the bank term loan, show you information on what it takes to qualify. A lot of the times you might not qualify because of cash flow, debt service coverage ratio, a lot of this stuff. But you'll have everything you need to in an email. And then from there you can say, yeah, and I'll put like in the bottom ending note or something like that. After you review this, let me know which one works best for you, or hey, the restructuring works best, and then this is how we can begin. And I can send you documents. Let me know if you would like to. If I didn't already send them. And it's very simple, hassle free. Boom, review, done, get back to you. Next step, you have a business to take care of. I'm taking care of you, helping you take care of your business, which matters a lot. So that's all from me. Hopefully you got value from this video. Go ahead and check out this form down below. Usually when you call my number, I'm not gonna, like, I'm busy. Understand that, please. And be putting yourself in my shoes like I do in yours, energy and time wise as an entrepreneur, independently doing a lot of this. Just so you know, I'm not a rep for a company. I'm not doing just the surface level stuff. I go deep, done a lot, helped a lot of people in many ways that's just not funding related. Personal growth as a person, becoming better, their marketing, their advertising, their strategies, their infrastructure, process flow, just so much more. And so you have somebody in your corner who will be here to help you. And if you called that number and if it didn't, like, I didn't answer anything, or change a number, etc., whatever it is, it can lead into my mobile if I have that on the voicemail recording or so. Just send me a text, reach out to me here on this number. But the form is the best way to get started. And then from there it can develop. And again, I have your best interest at heart. It doesn't even need to be a lot of the times on this on the phone call. Being honest with you, I've helped out a lot of people who haven't needed to go with me on the phone call because I've done a lot of it proficiently via email. And they're busy too. They'd rather text or email. And even at that point, I'm like, oh, I know, you know what you're doing. Just please look that over. Send me anything you need me to go over and fill out. And I got you, your best interest at heart. Other times it makes sense for this. Other times it doesn't. For clarity reasons, if it is a call, okay, for clarity, we're at this step. Now it makes more sense to move forward here. But a lot of the times you could just do it email and text, and I got you. Don't worry. I'll show you. I'll be transparent with you. So all of that is there. Go ahead and get started. I hope this video was helpful to you. I know a lot, but I wanted to be as specific in certain services. I could get more deeper into those services. The form will help you, the documents, and I can go into so much with settlements, with restructuring, with reverse debt consolidations, a consolidation, the refinance, the using collateral, real estate to help you, a cash out refinance, other scenarios. So this form will be here for debt relief, debt restructuring, usually will be the best option to graduate and then go into more. And then once you have that, then once you graduate, there are better options for you to check out. And that would be normally the best way to go through this. Other times it's the refinance consolidation. So that's all for me. Go ahead and look down below in the description and information, fill description and comments or comments, where I might leave the form in the comments to get started with this. I'll leave more information in the description about my email if you want to send me an email. I'll likely, once you do that, if this form didn't get submitted and it didn't work, send me an email, or I can follow up with you that way. Usually is it. And then I'll put like the fields here you see in the email. So you can just reply back to that email and let me know. It's very important. I know that. A lot of the times that's the best way to do it. It's for communication. Other times it might be this, but a lot of times it's better like this, energy and time wise, just to see also what I'm working with. And it gives you a micro commitment to understand that. And it also helps me understand what kind of energy and time do I need to put. Is this worth it? Is it a good thing I looked at this first before this? So that's all for me. Thank you for listening. And if you like this video, I'd greatly appreciate you giving it a thumbs up. Feel free to share it with others who you feel will find value from it. It can be a complete stranger, a friend, a family member. And if you haven't subscribed, please go ahead and subscribe and click that bell notification icon so you do not miss any future content on MCAs, non-MCAs, other financing options, ways of growing your business, payment processing, cash flow, forming your business, business credit, personal credit. There's just so much that I release on this channel that'll really help you build a huge infrastructure in your business, that it has the foundation up so you're not having to rely on MCAs. You're taking the right type of financing at the right time. Are you doing equity and debt combined, and so much more. So that is all for now. Thank you for watching.